How to build a rock-solid stock portfolio for 2022. Welcome back to Wealth-ology. For today's video, we will be going to talk about how to build a rock-solid stock portfolio for 2022. Let's get started. Stock 1. Berkshire Hathaway. The challenge with portfolio building is that it requires balance. One of the biggest mistakes we see new investors make is to only purchase stocks with price potential of 10 times to 20 times. They are unaware of the fact that these stocks come with a significant amount of risk. As a result, they create a portfolio that is exceedingly risky. Every seasoned investor will tell you that risk needs to be balanced with any portfolio. Now, the beautiful thing about purchasing Berkshire Hathaway stock is that you immediately have a solid foundation for your portfolio. And the reason for this is that Warren Buffett, the greatest investor of all time, runs Berkshire, a financial services company. Therefore, if you hold Berkshire Hathaway shares, you also own some of the best businesses in the entire globe. Any other investments that Buffett decides to make, including those in Apple, Coca-Cola, Bank of America, GEICO, Duracell, and others. In short, it's a hands-free method of investing in the businesses that Warren Buffett chooses to do so in. For those who don't know, Buffett is regarded as one of the world's most successful investors. His net worth is $85.6 billion, and it was all achieved by wise investing. He's not exactly the most foolish investor. Then, to support with your own money. Stock 2. ARK Invest Innovation Fund. Some of you may counter that because Buffett is an older guy, he favors investing in businesses with more established cultures. Using ARK's Innovation Fund is an excellent approach to counterbalance this. Katie Wood is the fund's creator and principal investors. Katie, she finances innovative businesses that have the potential to alter how the world operates. Therefore, she has made a lot of money through stocks and cutting-edge businesses like Tesla, Spotify, and Square. The combination of her investment strategy and Warren Buffett's is a wise choice to include in a portfolio because it provides a wonderful technique to balance risk from the start. Stock 3. Sophie. Now that there is a brilliant investor by the name of Chamath Palihapitiya, who has been crushing it ever since he began his fund. With this investment fund, he has generated a return of 32.9%. He also invested early in a number of high-growth companies, including Tesla, Amazon, Square, Bitcoin, and many others. He seems to have made money on every wagger I've seen him make. Anyways, Sophie is the name of one of the stocks he recently made public. One of such young businesses with a significant development potential is Sophie. Because if you stop to think about it, banking is one of the industries that has not been significantly affected. Everyone now that's there purchasing online, which has altered the learning process. People are beginning to purchase electric vehicles. Yet it seems that banking has remained mostly unchanged for hundreds of years. Sophie feels the demand by enabling users to handle all of their banking requirements online. It follows to a brand new style of banking organization dubbed a neobank that merely refers to a digital-only bank. They currently control the neobank market and are in charge of 90% of all new neobank account openings. It therefore stands a very good chance of leading the charge to disrupt banking. If it succeeds in this endeavor, it will be much more than a 10 times stock. Stock 4. Alibaba. In a portfolio, it's crucial to include businesses with a history of stability, those that have a fantastic time-tested company plan. One of those companies is Alibaba. They work in the booming e-commerce sector, where their incomes have increased 5 times in just 4 years, and they are among the top companies in China. The current pricing of Alibaba stock is among the things we enjoy best about it. Since the stock is down 20% from its high, You may purchase a fantastic company for a fair price. Stock 5. CRISPR Therapeutics. One of the businesses looking to achieve just that is CRISPR Therapeutics, which plans to create medicines using genome editing technology. Currently, the stocks have a market cap of $15 billion. But if they were to develop this technology and begin treating diseases, their market cap may reach $200 billion, comparable to that of a corporation like ABV. It is thus another stock with a potential 10 times return. Although there is a chance, there is no assurance. Stock 6. General Mills. Balance is necessary while creating a portfolio. General Mills is the ideal business for this because its business model has withstood the test of time. It has been around for more than 150 years and has continued to pay dividends for 122 of the most recent years. We can simply state that they are a food corporation with well-known brands like Cheerios, Yoplait, Lucky Charms, and countless others that is based in the United States. Their business strategy is not one of those that will be blown away in the wind. As you can see from the stock's current price of $56 per share and earnings of $3.90, they also pay a respectable $2 dividend, giving the firm a yield of 3.6%. Given the market we're in, those numbers are quite impressive. Stock 7. Bitcoin. Bitcoin doesn't have to take a significant portion of one's portfolio. It could be incredibly small, like 1% of it. However, we believe it is absurd to not hold Bitcoin. Bitcoin is one of those investments with virtually unlimited potential growth. If you purchased Bitcoin only 5 years ago, its value has increased by more than 10,000%. Let's assume if the economy fails, markets plummet, and there is severe upheaval. The one item that can save your portfolio could be Bitcoin. Stock 8. Centene Corporation. Possibly the two most crucial numbers to consider every time you purchase a stock is both pricing and profit. Are they making nice gains and selling the stock at a good price? Both of these parameters show good results for Centene. If you look at their earnings, they increase at a pace of 31% from 2013 to 2019 and a 19% annualized rate since their IPO in 2005. Additionally, its share price is now hovering at $60 with a PE ratio of 17. Given their earnings growth, they are one of those stocks that haven't increased significantly over the past year, making this a good entry point price. Centene's, they're the largest Medicaid managed care organization in the US. They focus on healthcare, they focus on insurance. So I'll expose your portfolio nicely to those two sectors. Stock 9. Brookfield Property REIT. This portfolio is beginning to develop quite nicely, with the owner investing in the traditional Warren Buffett manner through Berkshire Hathaway. With Katie Wood's ARK's Invest, we are a part owner in the most cutting edge from the inventive investing. We are involved with the Chinese market, Alibaba, the genomics industry, CRISPR, General Mills, and the food industry, and even have some promising growth prospects in Sophie and a little amount of Bitcoin. One sector that we think we're missing is real estate. As Bruce Flatt recently said, probably the greatest discount out there between what you would see as value and price is in REITs and real estate securities. Utilizing those chances is made possible by Brookfield Property Partners because they make investment in a variety of real estate in North America, Europe, and Australia. These includes office, multifamily, residential, retail, and hospitality. Consequently, they are a potent, diverse real estate corporation. Almost everyone can afford the stock because it trades for just $17 per share, and it pays a huge yield of 7.7%. Getting their revenue back on track after the epidemic is the one issue we do need to keep an eye on. This will be a fantastic offer at this pricing if they can. Which aspect of this subject have you found to be very useful? Please let me know by leaving the comment below. Please let me know in the comment section below. And if you like this video, please give it a thumbs up. Turn on the notification bell and subscribe to our channel for more. Thank you for taking the time to watch. Stay tuned for our next video.